What if you could trade the biggest US markets with less money than your morning coffee? Sounds crazy, but there's a reason smart beginners are starting here instead of stocks.
Hey everyone, and welcome. Today we're going to talk about something that sounds almost impossible. How you can trade in the biggest, most powerful markets in the world with, basically pocket change. Let's jump right in and see how it's done. So let's just ask the question straight up. Can you really start trading with less money than you'd spend on a movie ticket? We're talking maybe $2 or about 150 rupees. I mean, it sounds a little crazy, right? Well, the answer is a huge yes. And we're not talking about some tiny niche market either. We're talking about the biggest stage on the planet, the US futures market. This is where you can trade on what you think major assets will be worth in the future. And you know what? It's the perfect way to learn how trading works without having to risk a ton of money. Okay, so why even bother looking outside your own local market? Why go global? Well, it turns out there are some massive advantages, especially for someone just getting their feet wet. We've boiled it down to 6 key reasons. Let's get into them. So here's the game plan. We're going to cover access to the biggest names out there, how to use those wild price swings to your advantage, and why having tons of buyers and sellers is so important. Then, of course, that super low starting cost, the safety of strict US rules, and how all this puts you right in the middle of the AI revolution. First things first, access. I mean, think about the companies that literally shape our world. Apple, Google, Nvidia, Tesla. You can't trade them on local exchanges like in India. And the scale difference is just massive. Of the top 10 biggest companies in the world, 8 are in the US. India doesn't even have 1 in the top 10. So if you want to trade the titans, you've got to go where they are. All right, let's talk about a word that usually scares people, volatility. But here's a secret. For traders, big price swings aren't a problem. They're the whole point. Volatility is opportunity. If a stock can move a lot, it means there's potential for real gains. And this is where the US market is just in a league of its own, especially when companies announce their earnings. A big Indian stock might move, 4% on a big news day? But in the US, Meta has jumped 20%, Tesla 12%, Nvidia 16% in a single day. The potential there is on a whole other level if you can figure out which way it's going to go. Now check out this number. It's almost hard to wrap your head around it. $400 billion. That's the average amount of money traded in the US markets every single day. So let's put that $400 billion in perspective. The Indian markets trade about $10 billion a day. That means the US market is 40 times bigger. So what does that actually mean for you? It means you can get in and out of a trade instantly. There's always someone to buy from you, always someone to sell to you. It also means no single person or group can manipulate the market. The ocean is just way, way too deep. And this takes us right back to where we started. You can dip your toes in with just a couple of bucks. In a lot of local markets, you'd need thousands just for a single contract. This low barrier to entry turns US futures into this incredible learning ground. You could make 10 different trades with just $20, learning something new each time without the fear of a big financial hit. Okay, so that's the why. It's compelling, right? But theory's one thing. So let's look at the how with a real-world example. We're going to break down a trade in a company we all know, Intel. Now, what's so cool about Intel's chart is the history. This is a monthly chart, so each bar is a whole month. See that high point way back in the year 2000 during the dot-com bubble? Well, guess what? The price is right back there, testing that same old ceiling. Traders have a name for this whole U-shaped pattern. They call it a cup formation. It basically signals that a huge battle is happening right at a historically tough spot for the stock to break through. But here's the thing about charts. They only show you what happened, not why. To figure out if Intel can finally smash through that old resistance, we have to understand what's lighting a fire under the stock right now. Why did it suddenly jump nearly 50% in just a few months? And wow, what a story it is. First, the US government itself basically says Intel is a national treasure and buys a 10% stake. Then, Elon Musk's companies put down $14 billion to partner with them. Then, they land deals with Google and Nvidia. And to top it all off, their new chip, the 18A, is finally good enough to compete with the best in the world, TSMC. This isn't just random market noise. When you see a powerful story like this lining up with a huge technical pattern on the chart, that's the kind of high probability setup traders dream about. So let's zoom out and put a bow on all this. What's the main takeaway from our dive into US futures today? It really all comes down to this incredible combination.
You've got the low capital requirement, which takes away all the stress and fear of starting. You've got high volatility, which gives you actual opportunities to make money. And you've got that deep, deep liquidity, which makes it a fair and safe place to trade. It is just a fantastic arena for anyone who wants to learn the stuff and grow as a trader.
So the door has never been more open. For the price of a coffee, you can get real, hands-on experience in the most important markets on Earth, trading the companies that are literally building our future. The only question left is, what are you going to explore next?
And once you see how this actually works, you'll never look at starting small the same way again. Follow for more real-world trading strategies made simple.